I think Maggie Maher's book is a great book to read. Bull is a fantastic book to read. And I think if you go back and I was actually recently looking at just the numbers, if you go back to late 99, early 2000, and you look at, companies like Microsoft and GE and a lot of these high flyers, they were sitting, GE was sitting at 40 times earnings. And then 15 years later, it's sitting at 14 times earnings. And, of course, earnings have grown considerably through then, and the stock hasn't done a whole lot. And so basically, you definitely see this pattern of in 1982, markets were very undervalued. Again, a company like GE was in single-digit P's. Coke was at 9 times earnings or something. And again, in 99, 2000, Coke was at 40 times earnings. And so we had this massive bull run from 82 to 99. And we haven't had much happen to equities from 99 from today. In fact, if you look at it from the point of view of the NASDAQ, it's almost played out perfectly according to what Maggie would have said, because the Nasdaq peaked at 5,000 in first quarter 2000, and it just hit 5,000 first quarter 2015. So that was a 15-year end to end. Even the Dow and the S&P, they haven't done a whole lot in the last 15, 16 years. So, but I would say that we are not at a point which is like 1982. And in the sense that we are not at a point where we have screaming bargains all over the place. For the last couple of years, I have not been able to find anything meaningful to buy in the United States. And it's not because things are at 40 times earnings. So they're not euphoric, but they're not cheap. And I don't think that most things are in bubble territory. I think some things, especially in this part of the world, are in bubble territory. I don't think Google's in bubble territory. But there are certainly, even in terms of private valuations of some of these venture rounds and such that go on, I think those are in bubble territory. So we have some bubble-like behavior in certain pockets. So history doesn't repeat itself, but it does rhyme. So we don't know whether 2016 or 2017 is a low, but I would say that the odds are high that when you get to the 2030s, 2035s, and that type of a time period, that the lessons of 99, that generation is going to say this time is different, because it's so far, it's 35 years. And that's why we have these cycles, because one generation kind of retires, a new generation comes in, new kids on the block, and they say, these guys don't know what they're doing. We know. And so I think that it's good to be cognizant of those cycles, but I agree with Guy that you're far better off focusing on individual businesses and making the investments based on the economics of the business.
I believe that if you continue to do quantitative easing, you'll eventually get inflation. I think that everything that I don't want to be anywhere other than stocks, because they have unlimited upside and just about every other instrument does not. I want to be in stocks that are inflation protective. And this idea of going to cash or some other instrument, what are you going to do if you do get inflation? But I think other than that, if we look at the success of Warren Buffett, it's because he didn't waste too many brain cells thinking about Mary Maher and when the next cycle is going to come, and he just focused on businesses.
You need to start with a business. It's a big mistake to start high level and try to go down. That's just not a good way to go about it. I had an interest in Turkey because there was a lot of dislocation at the time, and it was hated and unloved. But immediately after when I made my first trip to Turkey, my focus was on meeting companies. And I was just going there to understand what these businesses did. And I love figuring businesses. I didn't care whether we made an investment in Turkey or not. And I didn't really know. I didn't even think we would ever invest in Turkey. But basically, I probably in the last few years visited probably 70 or 80 listed Turkish businesses. And I didn't really care about the macro, whatever was going on. It was there in the background. What I was looking, everything was on sale. Everything was very cheap. What I was looking for is the greatest businesses that were immune to any of the macro things that are going on. So, for example, if we have a Coke bottler in Turkey, or let's take a more extreme situation because Turkey is too Mickey Mouse to talk about Coke bottling. Let's say we have a massive thermonuclear event in the world, thousands of warheads go off. Instead of 7 billion humans, we're left with 2 million humans. The human race is basically almost wiped out. Okay. Somebody somewhere will start bottling Coke. Okay. The currency will be gone. Everything will be gone. I don't really care if it's seashells, but a person will be willing to trade some amount of their labor for an 8 ounce serving of Coke. Okay. So, in a thermonuclear event which wipes out 99.99% of humanity, Coke is around. So, are we going to really care about the Turkish lira? No, completely irrelevant. And so, when I invested in the Coke bottler and when I started going to Turkey 5 years ago, it was 5 lira to the dollar. Now it is 32 lira to the dollar. All our investments in dollars are up massively. All Mickey Mouse, didn't care about the macro. All I cared about is that if you have a Coke bottler, people will be willing to trade a certain amount of their labor for a 8 ounce serving of Coke. It doesn't matter what the inflation rate is. Doesn't matter what the exchange rate is. Doesn't matter what anything is. So we start with a business.
A great business remains strong through all the ups and downs. Mohnish Pabrai believes that instead of trying to predict macro trends or worrying about the economy, investors should focus on individual businesses. Macro factors keep changing interest rates, inflation, government policies, but a great business remains strong through all the ups and downs. It's actually a simpler approach. Rather than spending hours following daily headlines, just open a stock screener and look for companies whose earnings are growing consistently and are still trading at a reasonable price.